Town Bank Mortgage, NMLS number 512138, is an equal housing lender. This podcast is for informational purposes only. And now, the man born with a 5 o'clock shadow and with the NMLS number 2028-201. He is a gentleman. He is a scholar. He is
Tyler Cralle.
So I absolutely love that the other day I made a video about this, talked about it on my podcast. How don't listen to me. I don't make predictions about what's going to happen with rates. And then, no joke, the next morning, I make a prediction about rates and nailed it. Just like straight up. Still, don't listen to me. Don't listen to anyone when it comes to what rates are going to do. Like I said, if anyone knows what rates are going to do, they're retired and they're living off the interest. Like, if you can accurately know what is going to happen with rates, you'd be snapped up by some giant hedge fund, someone on Wall Street pick you up, and they're going to pay you gobble and just, money that you, with so many zeros, they won't even fit on a check. That's how much you're going to get paid. So, unless you know someone's making that kind of money, I would, and even the people that make that kind of money on Wall Street with computers that cost even more than that, they can't accurately predict. So don't listen to anyone, especially me. Like I said, I do an analysis of what happened with rates, and that's what we're going to do today on the Friday edition of Wilmington Mortgage. I am the aforementioned host of this podcast, Tyler Cralle, of course, loan officer at Town Bank Mortgage, right here in Wilmington, North Carolina, where we break down the top stories impacting mortgage rates every single weekday, unless, of course, I'm not here, but I'm here today. So away we go. All right, yeah. So it was funny. I do a morning newsletter. For those that haven't signed up, you should sign up. You're missing out. I enjoy it. I try and get it out every morning, every weekday morning. Like I said, sometimes with the show though, it doesn't happen. But I would say 90% of the time it's getting out there, and it's sort of a wrap up of what happened the day before and what's going to happen or what could happen the day ahead, because it comes out. Try and get it out before 7 a.m. And I was talking about how we had 3 major reports coming out on Wednesday. We had PCE, GDP, and durable goods orders. And what I was saying was we had such a good day for rates on Tuesday that the markets usually, whether it's really, really good or really, really bad, they like to kind of do a little bit of a reversal. And all they're looking for is something to do that. And so I said, if one of these reports is a little better than expected or worse, then you're going to see a little bit of jump in rates. But they're looking for it. They're going to move. And that's precisely what happened. Now, it wasn't PCE. That was as expected. GDP was right on the nose, 1.5% annual rate. It was durable goods orders was better than, like almost 4 times better than expected. And so we saw rates move up a little bit. That's what happened. And I nailed it. Where's my plate on? I think I have an applause button, don't I? Nope, that's not it. That's a good one, though. I nailed it. Happens every once in a while. No, I think I have an applause button. No, I don't want that one. That's not a good one.
Hey, remember the house?
Nope. I don't have one. I think I do this every time. I'm like, I have an applause button. I have to get one put on my soundboard, but I don't have one. But all right, I nailed it. But like I said, don't listen to me when it comes to what's going to happen with rates. I am smart enough. Was it Socrates or Aristotle? Who was the one that said, a smart man realizes he knows nothing? And I know that I do not know what is going to happen with rates the next day. But I know what happened yesterday. So just like on Wednesday, Thursday was a slight uptick. I think on Wednesday, the 10-year was up about 2 or 3 basis points. Little upward movement in the 30-year fixed, according to Mortgage News Daily. On Thursday, no movement in the 30-year fixed, according to Mortgage News Daily. And the 10-year was up not even a basis point. So a little bit, really nothing. A very quiet, kind of nice, quiet Thursday, which is good because today could be a little rambunctious. We got Jackson Hole. So Jackson Hole started on Thursday, but we're getting the Kevin Warsh speech which he's already said he's not going to say anything, like forward guidance-wise. So, I don't know. You can interpret anything. But I will say other Fed officials are speaking. We'll talk about that. And then we have the revisions to non-farm payroll, which will give us an idea of what's really happening with the labor market. So we get we've had 2 years in a row of huge revisions, close to 1 million, that if we get another big revision, it could be a sign. So we could see some movement. We could. But Thursday was very kind of boring. Jobless claims, we only got one really kind of big report. That was jobless claims. They unexpectedly fell, so it was a little better than expected. Second consecutive week that we saw a drop. They fell to 203,000, down 4,000 from the previous week. And that was the second straight weekly drop, which I think economists were projecting it to rise to 210. So we're not talking like major movements here. The 4-week moving average increased slightly to 205,500. That's the third consecutive weekly increase. And then continuing claims are in this like very tight pattern where they rise one week, down the next one. This week they fell 1.78 million for the week ending August 15th, down from 1.8 million the previous week. And this is now the third time in 5 weeks they've been at 1.78 million. So it's like they go 1.78, 1.79, 1.78, 1.8, 1.78. So I'm guessing with my amazing abilities of projection or predicting, we're going to see rates, or we're going to see the continuing claims rise to a little bit, to either 1.79 or 1.8 next week. You can bet on it. No, I'm just kidding. Do not bet on it. Do not listen to me on that. All right. As I said, probably the big story of the day, and there were no big stories, was the Fed officials talking going into the meeting. And it was kind of funny because I wonder if I'm sure they planned this. You had kind of like a Goldilocks situation where you got one Fed official who's like, inflation's too hot. And another Fed official is like, whoa, actually, we could be moving. It's cooling. We're going to go down to that 2%. And then someone in the middle, but it's not like Goldilocks where like, this is just right. They're just saying is that they don't know which way the rates are going to go. So it was like one person said they're definitely too high. One person said they're going to drop. The other person said, I don't know what they're going to do. So we did have some Fed officials talking heading into the Jackson Hole speech by Kevin Warsh. So Boston Fed President Susan Collins, not to be confused with the Maine senator, not the same person, she sounded open to a possible rate hike, saying, quote, I am open to supporting an increase if I see conditions as not providing that evidence of continued disinflation that I'm looking for. While she doesn't vote on rate decisions, that's kind of important, she does participate in the debate, so she will be a voice in that room. And she did say that the tightening soon could be appropriate without sustained progress on inflation. Now, she also was asked about policy. And she characterized the current federal funds rate of around 3.6% as mildly restrictive. So she's like, it's a little restrictive, which is an interesting way when you don't think it's having the effect. You would think that maybe it's too loose. So that is interesting. Kansas City Fed President Jeff Schmidt, who of course getting a lot of the attention because we have Jackson Hole as being the event is being held by the bank, the Kansas City Fed. He was similarly focused on inflation, but didn't really know. He was the Goldilocks, saying, I'm a very strong believer that if we're going to have a scorecard for the Fed, it's got 2% inflation, it's got stable prices on it, and we're not there. He added that the central question is whether current policy is restrictive enough, which Collins said it was. He said that he views the policy rate as very accommodating. So you have kind of the restrictive and accommodating. Where do you stand? Very accommodating, too accommodating, very restrictive, too restrictive. He's very accommodating. She thinks that we're restrictive. And then we had Cleveland Fed President Beth Hammack, who sounded somewhat more optimistic about the directions of rates, saying that she believes that inflation ending this year will be around 3% before declining into the mid 2% range. So she's the one who's like, I think we're on the right path. And so I guess she didn't directly comment on the restrictive, too restrictive, accommodating. But I would assume that she thinks it's somewhat restrictive because it's going to lead to disinflation. So it's doing its job of helping with inflation. So we had three Fed officials all talking about what they think is going to be happening with inflation. And then we're going to see what Kevin Warsh has to say today. And it could be interesting. Or for most likely it's not, because I don't know how many times he has to make it clear that he's not going to provide forward guidance. He's not going to be doing what Powell does and sort of, leave breadcrumbs on what he's going to do. He's making it very clear. Now that can backfire him. There was a great piece. I've read so many pieces this week on Kevin Warsh and, Scott Bessent. So I can't remember who it was. It might have been Nick Timmeros in the Journal. But they were saying is that, one of the dangers with not doing what Powell did is Powell was sort of leading. And he was the guy, right? It's very evident. Nick Timmeros has written about this, but just by the way that he clearly was controlling, I don't want to say controlling like central planning type thing, but if, he was listening to the people and then he was like, all right, this is where we're going. This is where we're going to go. And he let everyone know that. And if there was a decision, he would try and get people on board. That was very evident, that last rate cut that you could tell some of the board members did not want to do, or the committee members. And he got him over that finish line, and it was him. It's evident. And so Warsh, the danger that he has is that if he's the one who's not going to be kind of leading the Fed, someone else could potentially take that. And what is interesting is, if you've noticed, a lot of people, I think, thought that Powell was going to be some sort of, foil for Warsh, that he was going to get in the way and he was going to be a pain, and, he was going to sort of, to some extent, maybe stop Warsh's agenda. And he hasn't done any of that. No one's heard from him. He's just on the board voting. And you kind of got to give him credit for that. Because, he could easily become like sort of this anti-Trump guy and get a whole bunch of media attention and be like the thorn in Trump's side. And which is what I think it happens to a lot of people, right? You see a lot of people go up against Trump, become sort of this nemesis. And then all of a sudden it's, fame and fortune. And then, they get sort of lost in it. That becomes their identity. And Powell could have done that, but he's not. He's not doing anything. He's still just doing what he thinks is best for the country. And you kind of got to respect that. He's not trying to take the limelight. He's not trying to disprove, he's not going to either side. It's not like he's like, oh, I got to prove that I was appointed by a Republican originally with Trump, and I got to show my bona fides and prove that I'm still on Team Republican. But he's not doing that. He's not doing the other thing, which is like, oh, Trump made fun of me and said stuff, and so now I'm going to become this big anti-Trump guy. He's not doing any of that. He's not seeking the limelight. He's just doing what he thinks is best. Listen, I'm biased on this. I like Jerome Powell. I thought he was a good Fed. I think he's going to go down in history as one of the best Fed chairs. Sure, we had an inflation problem and everything, but navigating COVID and, like I said, it's over here, that Nick Timmeros book, $1 Trillion Triage, what he did to save the economy. Amazing. And the fact that, once again, he's had opportunities where he could seek the limelight, and he hasn't done that, and he's not doing it now. So my point is that Powell's not going to be the guy. If Warsh doesn't want to do it, someone else might, but it's not going to be Powell. That was my whole point. All right. We're done. You guys have a great Friday. We'll be back here Tuesday. I am starting my podcast, my interview podcast, back up. I'm going to start doing it. I think I'm going to do a little change. I know I've rebranded like 3 times. I'm going to do it again. I think because I've been releasing, I'm going to put it under the umbrella of Wilmington Mortgage. It's still going to be everything that we're talking about. Nothing's going to change. But because I release it on Monday, I think I'm just going to call it the Monday Show. I kind of like that, the Monday Show. And then I do this show Tuesday through Friday. That's sort of my goal. So if you don't like that idea, let me know. But it doesn't get just the name of it. I like it, the Monday show. All right, you guys have a great Friday. We'll be back here Tuesday for another edition of Wilmington Mortgage. And remember, as always, do not wait to buy real estate. You buy real estate and wait.